Hello and welcome to TaxSnax, where we're doing a new series on stamp duty land tax, or SDLT. We're not, I should add, going to cover the very basics of SDLT. This series will assume you know broadly how and when the tax operates. Our aim is to look, albeit briefly, at some of the areas of concern that come up in practice. Today, I'm going to start by discussing multiple dwelling relief. One of the reasons for this is that it's popped up quite a lot in county court negligence claims. What we see is conveyancing solicitors being sued by their clients because they failed to consider or apply for the relief. So I think there must be some misunderstandings or at least lack of awareness about it. So what is multiple dwelling relief? Well, the purpose of the relief is to stop people who buy multiple properties, say for commercial purposes, from being disadvantaged by having to pay a higher rate of tax per property than someone who just bought one. So without it, a developer or landlord, say, who wanted to acquire multiple properties, because they would be linked to transactions in all likelihood, would end up paying a higher rate of tax on the combined purchase. So they would be strongly incentivized to try and buy all the properties separately. And that would distort the market, increase costs and delays. Multiple dwelling relief attempts to correct that situation. The law is found in Section 58D of the Finance Act 2003, which brings in Schedule 6A. And it applies to transactions with multiple dwellings, including linked transactions that will look together. And what this means is that the number of separate contracts under which properties are bought is pretty much irrelevant. What you need to do is look at the substance of the deal. How many dwellings are being purchased from a commercial point of view? The relief is not available on certain transactions, for example, right to buy purchases, high-value residential purchases by companies, or transactions that are eligible for group relief or charity relief. You're not going to need anywhere in those without circumstances, of course. The relief must also be claimed on return. You're going to need to submit a return in order and claim it, tick the box for this relief. The effect of the relief is to take the total consideration for all the dwellings combined, to divide it by the number of dwellings, and then to charge SDLT on that amount. And this means you get the benefit of the lower rates of SDLT on each property as if they were bought separately. However, there is implicit in that effect a distorting outcome. Because the relief averaged the property prices across the dwellings bought, it redistributes the value before it charges SDLT. So a very high value property that pays the higher rate on most of the consideration would in effect have the rate of SDL reduced if it was bought along with another very low value dwelling that does not use all of the lower rates, because those lower rates will end up getting used to the full in both cases. And this can make the relief very attractive if it's available. There is firstly a clawback provision if circumstances change in 3 years following the acquisition. So if you buy multiple dwellings and they're reconverted into a single dwelling within 3 years, there's going to be a clawback on the saving under the relief. So that's something to watch out for too. But the key question is, when do you have more than one dwelling such that the relief applies? Now, obviously, in many cases, that will be straightforward. If you're buying a block of flats, it's going to be multiple dwellings. But in the case of annexes and outhouses, it can be difficult. And that's really what's led to this string of negligence claims against conveyancing solicitors. So what counts as a dwelling for multiple dwelling relief? Well, for that we turn to paragraph 7 of the schedule, where it says a building or part of a building counts as a dwelling if it is used or suitable for use as a single dwelling, or it's in the process of being constructed or adapted for such use. So that falls back on the concept of dwelling, which we see across SDLT. But it's not always an easy test to apply. HMRC has extensive guidance on the definition of dwelling, and that's useful. The question is essentially whether the property is suitable for independent living. Does it have independent access? Does it have cooking and washing facilities? You've got to think, could someone move in there and without excessive reliance on the other dwellings live their life independently? And that guidance is helpful on that question of what is a dwelling generally. But I think it's really important to know, and I think this is where some of the problems come from, that guidance and the case law is provided in the context of the definition generally of residential property, which also relies on the dwelling. Remember, when you're looking at what is residential property, you start with the dwelling and then you bring in the gardens and grounds and that sort of thing, and that's what captures residential property. And so dwelling has been a very important concept for that residential property rate question that we see. I'm not going to talk about that today. But it's not clear that all of that guidance really applies and addresses at least the concept of a single dwelling, which is the key to multiple dwelling relief. What you've got to be looking at is whether you have a single dwelling or whether you have multiple dwellings. And that distinction has been the issue in the cases I've come across, where there's really little or no authority. So it's one to watch out for, it's one to think about carefully, and the most important thing, of course, is that you consider it and advise your clients sensibly. Thank you for listening, and I hope you'll keep watching.